In the last video on the EURCAD, we set up some trades that we'll take a look at. We set up a rule that would sell to open a position when the price broke through this trend line. So when we looked at this trade last, I believe the chart was about here. So the strategy was to sell when the price broke through this trend line. It's actually quite interesting that we used an hourly indicator, an hourly interval. If you look at this trend line, it's based on a 1 hour interval. If we had used, for example, a 5-minute interval, then we would have sold too early when the price closed below it at this point. So one of the reasons why I always use a longer term or longer interval period when looking for a change of trend is to avoid getting spiked and making a move too early. So this example, the price broke through the trend on the 5th of November on Friday, and we then had two rules set up to close the position. So let's take a look at those rules. The first one was if the price hits this trend line, and I pulled in the trend line from the outer channel, which it actually went on ahead to hit. So I said this was the first likely area of support, which it broke straight through. So we actually took profits when the price broke through this trend line. Okay, on Monday morning. The second rule, which didn't execute, was if we were in a short position and there was a positive MACD crossover, which happened after the price broke through the trend line, the rule was set up to close the position. So that one didn't execute. What did execute was the trend line alert. If we take a look at this trade, it opened on Friday the 5th of November and generated a profit of just under 180 pips. All of these trades were posted on Twitter in real time, so you can cross-check the results and follow my trades as they happen.